All right, welcome in. This is the Thursday deep dive episode. We have Ian Gray on the show as always, and we're talking a fun stock today. One of the most controversial companies in the world right now, possibly the most controversial. And I don't think I'm using that term lightly. It is Robinhood. Ian, you said you just switched over from Robinhood to Schwab. What was your experience like? I guess maybe one tidbit to start things up. What was your experience like using Robinhood? And are you excited to talk about it?
Yeah, I'm excited to talk about it. I think it was, as everybody talks about, it's a great user interface and pretty impressive what they've done, but we'll dive into that.
All right. And Ryan, do you want to introduce the company?
It's kind of a household name at this point, but for, I guess, anyone that doesn't know, it's a commission-free brokerage platform. And I believe it was the first. I might be getting that wrong, but the brokerage system for a long time, I'll kind of go through the background of why this was started. You used to have to pay a fee when you bought or sold a security. And so let's say I wanted to buy 5 shares of Starbucks or 10 shares of Starbucks, it would be a $5, at least on Schwab, this is what it was. It'd be $5 to purchase that trade order, and then it would be $5 on the back end when you sold it. This is a bit of I guess there was some friction in that process because people wanted to get rid of the commissions, but it also encouraged people to, when they bought, do it in size as opposed to being able to do it with small amounts of money. So Robinhood's goal, or what they did, was they came in and they cut that to zero, and they made money, I guess, in a different way, which is payment for order flow. And so basically the way that works is when you submit an order, a trade order, you want to buy something, they reroute that order. So they send that order to what are called market makers, which is primarily Citadel, which accounts for 34% of all Robinhood's revenue. And then Citadel, and correct me if I'm wrong, buys that, whatever that security is, sells it to you at a fractionally higher price.
It's unknown what they do, but they don't pay Robinhood for no reason. So I'm assuming, you got to assume they're making money off of this.
Okay. So I guess whatever they're doing in between your order, they're making some sort of money. They want those orders, and then they give Robinhood a rebate or a fee in compensation for that order flow. And so, Ian, you got something?
I was just going to add something there. So the money, at least as I understand it, the money's made on the spread. So in any transaction, there's a bid and an ask spread about who's paying, like how much the seller's willing to sell it for and how much the buyer's willing to buy it for. And on Robinhood, unlike some of these other brokerages, that spread is larger. And so they're able to get sellers to sell their shares a little bit lower and then sell them to large chunks of those to buyers at a little bit higher. And so then some of their customers basically are able to take that difference and make money immediately on it because they're able to buy it at a lower price than it's like trading for in the market, basically slightly lower, but on large amounts of money, it makes a difference. Buy it at a lower price and then sell it immediately for a higher price. And they're the market makers making that transaction work. And because of Robinhood's clientele, they're able to have a spread that's a little bit bigger than normal.
Hey, what are you saying about Robinhood's clientele there, Ian?
Well, I'm just, unlike institutions that care about large blocks of money, and a cent here or there, or a basis point here or there actually makes a difference. For many of Robinhood's users, the difference between $6.13 a share and $6.12 a share doesn't really matter because you're transacting a few shares.
That makes sense.
And I think I don't know if I have it here, but the average revenue per user number for 2020 was, I believe, was like $137.
That's trailing 12-month Q1, yeah.
Okay, so I'm curious. Do you think users are saving more money being on Robinhood?
Well, if they're going to be that active of traders, yeah, because those $5 fees would add up if they're trading every day. But would they trade every day with the $5 commissions? I don't know. I think it's a bit apple to oranges.
Average revenue per user, $137. Average account size, less than $4,500. So that's not a small percentage of the assets in there.
It's a solid take rate. I don't know.
But they also make money not just through equities. They also allow users to buy or sell options contracts, cryptocurrencies, and options actually is more lucrative for them. So Mark Rubenstein found this, that while options only accounted for 2% of Robinhood's assets under management, it accounted for 47% of transaction revenue. Bit of a dangerous incentive there, but we can get into that later. And then Robinhood is mobile first. So I don't even know if I don't know if you can trade on.
Oh, yeah, they got web. They got web. Yeah.
But basically, that's how they really carved into this market and got a lot of first-time investors. It was because it was so easy, so intuitive, and I mean, they really do have quite the good user interface, user experience, and they really are a bit like their Silicon Valley tech peers. They use a lot of the same sort of.
Well, good for Rob. It's a good user interface for Robinhood. We might have to define that differently later, but
they use a lot of the same sort of tricks with to draw people into the app. So push notifications is one way they do that. Whenever something goes, I think up or down 5%, you might have to opt into this, but they send you a push notification, and they do make the experience of buying and selling stock feel a bit like a game. And they get a lot of crap for that, calling it gamification. But it's like you get a free stock, it pops out of a present, and there's confetti. If you think a stock's going to go up, you hit the up button, and they offer you a bunch of out of the money call options, and vice versa. So that's,
it's the infinite. What was it called? The free money. Fuck. What was it called?
It was an infinite leverage trick. Yeah, that was a bit of a blip on their part.
That's old. We've solved that.
They also have some other revenue sources as well, though. So they have Robinhood Gold, which is their subscription service. I think it's $5 a month. I'm not sure what exactly you get on there.
I think better margin rates, maybe access to better margin, stuff like that.
I think some access to more research that they do as well.
Yeah. Okay. And then they have net interest income on margin lending as well as cash deposits that are in there. And there's, I think, a few other ways they make money, but most of it comes from transaction revenue. I think it was around 75% in 2020.
Yep.
But I'll get into the history a little bit. So it was founded in 2014 in Palo Alto by Baiju Bhatt and Vlad Tenev. So the two were roommates at Stanford, where Vlad studied mathematics and Baiju had degrees in physics and mathematics. I believe both of them knew how to code because after they graduated, they moved to Wall Street or New York and started selling trading software to hedge funds. And that's where they kind of realized that there's essentially this back-end way that a lot of these brokerage services are making money by rerouting their orders. So commissions weren't really that necessary. They kind of saw that opportunity. They moved back to Silicon Valley, where Robinhood is now headquartered, and they founded the company on a first $3 million seed round. They've had 11 total funding rounds since then, with the latest being more than a $3 billion convertible notes offering, I think less than a year ago now.
That would have been during the GameStop stuff. So yeah.
Yeah, and that was basically to post collateral for their users.
For the clearinghouse. What do they call them? The DF. I don't know. Whoever's above
T+2 or whatever.
The T+2 people. It's the clearinghouse. I forget their name. But yeah, they made them post through doing in collateral, which.
So they borrowed it from their investors. Yeah. And I believe that's part of what the incentive is to go public, is because those lenders that gave them the convertibles are hoping for an IPO so they can convert that to stock.
And I assume they got a pretty good deal there.
I think it was a 30% discount to, I'm blanking on whatever the
fair value they had at the time. That's pretty good. All the industry competitors are well known. If you're an investor, you likely either use Robinhood or one of the competitors. And if you don't, and you're using like Morgan Stanley, congrats. You probably shouldn't be listening to our show. But that includes, Vanguard, Charles Schwab, and TD Ameritrade, who are together now. They're one company. There's E-Trade, which I believe is actually owned by Morgan Stanley. Not sure if that's gone through. Coinbase is a competitor. Ryan did hit on it earlier, but Robinhood has a big crypto market, which we'll get into probably in highlights, lowlights, future growth opportunities. IBKR, which is Interactive Brokers, is another competitor. And then there's a lot of smaller mobile first trading apps. But Robinhood has they probably have they're the clear market leader in these mobile trading apps. There used to be Webull, which was W-E-Bull. That's totally fallen off now. Robinhood's the clear leader of these. They're really competing against Schwab, Vanguard, Fidelity. I'm forgetting Fidelity too. They're the legacy solutions.
And Cash App.
Oh, Cash App as well. Although to be honest, I have the Cash App for the debit card. It's weak. They're investing stuff. Robinhood stuff, it's improving. It's pretty weak from just from the options you have. Like you can only now just start doing dividend reinvestments on Robinhood. Cash App is significantly weaker. I guess though there's other ones like M1 Finance. That's kind of an interesting startup too. And there's Public and Common Stock. Public, right?
Yeah, and there was another one where you
Common Stock. No,
maybe it was like a sound.
That was that United Kingdom one. Yeah.
But there's a lot of
eToro.
eToro, yeah.
Okay, so getting more to the industry, retail investing assets are at $50 trillion, according to the S1. So quite large. How much of that is reasonable for Robinhood to attain? Like a lot of it might be 401ks, a lot of it Fidelity. So I'm not really sure. Crypto trading is hard to calculate, but just looking at Coinbase is doing about $3 billion in sales right now. They have commissions. So it's unclear whether that's kind of a your margin, my opportunity thing for Robinhood, but we'll see. 70% of Robinhood's AUC, which is assets under custody, that's kind of how much money is deposited with them, is aged 18 to 40. So 70% of their customers are within that 18 to 40 age gap. And then 68% of people aged 18 to 29 have no money invested in the market whatsoever. So that the reason I put that in there is it shows the opportunity that Robinhood still is ahead of itself to acquire more customers. All right, Ian, you want to hit management and ownership?
Yep. So the CEO of this company is Vlad Teniv. You guys saw that picture, right? You throw on a headband and Vlad Teniv turns into Roaring Kitty.
They look suspiciously alike.
Yeah.
They also look like the John Wick character.
Yeah, what's his name? I forget.
Keanu Reeves.
Yeah.
I can see that. But no, Vlad Teniv is the co-founder and CEO. Baju Bhatt is the chief creative officer, which is kind of interesting. I don't know that any other financial institution in the world has a chief creative officer. I could be wrong about that, but
they also don't have monetizable users. All right, whatever. Yeah. Sorry.
But anyways, I think the creative officer title is actually, as much as I kind of would like to give them a hard time about that, I think it's actually a good thing for Robinhood, given how much they depend on their user interface and creating a seamless environment for people to get introduced to investing. And I think that is one of the things that Robinhood has done a great job of, is actually creating for better or for worse, creating an app that is easy for people to use, easy for people to at least understand investing at a baseline level. And they've just people like the interface for the most part, especially people who aren't coming from the traditional investing world. Both of them, as we mentioned, are Stanford graduates. I think from what I read, Vlad had 2 other startups before Robinhood. So he's looks like he was kind of trying to test out this startup world for a little while. And then it's estimated that both founders have a combined 20% of the company. So pretty high insider ownership. That is subject to change with the IPO. We'll have to check on that as kind of some more numbers come out, and they probably file in an amended S1 and provide some more color for that. I'd say the last thing I'll say about management and ownership, there's been a lot of controversy over the last couple of years or especially the last year about Vlad and some of the tactics they've used, and also the whole GameStop saga and all that type of stuff. But one thing I will say in their favor is that the design, the rollout, and the word of mouth marketing is very impressive in the way that they're able to gain this big following. I was reading an article that when they were first starting, they had an office across from Stanford, and they would go test. They'd be trying out a new feature, and they'd go take the app out and go test it with students at Stanford to see whether they liked it or not. It's kind of reminiscent to me of Tinder and Bumble that we've talked about in the past, and how they really targeted those college students and tried to get feedback from college students and create those even college student events and stuff. And it seems like they've done a good job of getting a lot of good data from people, basically going out and just seeing, do customers like this, and trying to find that product market fit. And it's really been a good Silicon Valley story in that sense, but definitely some questions with management, especially in the last year.
The referral program was very smart. I believe
a lot of people
that's how I got Ryan to download it. I was like, hey, get this. They're going to give me a free stock. It may have been Chesapeake Energy like everyone else got. And then you immediately sell it for $3. But that anticipation, you're like, 1 in 200 of these people get Apple shares. And you're like, Apple share. Oh my God. It turns out you just get a penny stock, but they can't really, what are you going to do? We can't. So this is a pre-IPO company. So we're going to play the valuation guessing game before the second half. So Ryan, you want to kick off earnings?
Yeah. So their Q1 total net revenues was $522 million. That was up 309% year over year. They had negative $1.5 billion in GAAP net income for the first quarter due to the change in fair value of their convertible notes.
God, what an investment by those people, whoever did it.
Yeah, good on them. But I guess if you X that out and all other costs, their adjusted EBITDA margin is about 22%. There is, I think we can all agree that theoretically at scale, this could be a very profitable business. It's pretty asset light.
Yeah, I'd say their operations costs could be that's something I was looking at that could, they're having to beef up that customer support.
Yeah.
We'll see.
Which is probably worth the investment. And then they have, general and administrative is their largest operating expense. It's barely outpacing marketing, which to them it's worked. That marketing spend really has. And if their average if it costs them a share of Chesapeake Energy in order to get $137 in revenue per user a year, it's definitely worth the expense. But their net cumulative funded accounts was 18 million. That was up 150% year over year. Although I guess the amount of accounts that I thought were just kind of barely funded and just idle.
I like how they didn't fund it, because now mine, like, I don't count in that anymore. You know what I mean? They could have kind of said I was an active user just because I don't have any money in there anymore. But I like how they did this. Yeah,
they have monthly active users of 17.7 million. And that's a little more than doubled year over year. So very few that are funded and not active users. And then they have 80.1 billion in assets under custody, which backs out the net margin balances. So this puts the average account balance at just under $4,500. I think we asked like a year ago what we thought the average account balance was for Robinhood, over and under 5,000.
I think we said under.
Yeah, at the end we were right. So
good. That's great. Well, I mean, hey, back then it would have been a lot worse too.
Yeah, I guess the market's probably helped with that. But earnings overall, I mean, they're growing like a weed. This is a company that really embodies the phrase "move fast and break things."
Yeah, almost break the markets, break the financial world. But Q1 should be mentioned. Q1 ended in March, and April, May, June. There's some pretty
more boring.
Yeah, but within certain parts of it, crypto was super hot, I guess is the best way to describe it. Very volatile there, and they've been making more and more money off Dogecoin, which we'll get into. And then I think Q2 could even be a better number for them. I don't know how much crypto can be. I don't know. Meme stocks have been going crazy too in Q2. I don't know.
The presence of Wall Street bets has been so influential in Robinhood's success. As long as there's these micro bubbles and the virality feature of like, oh, this is the stock we all have to get in on. Volatility is their friend.
Yeah.
Because honestly, it's really not all that different than the old way of brokering. Like the incentive is for people to transact. It's just a backdoor path to do it.
Yeah. Yeah. There's no different. Yeah. We say the incentives are kind of mixed, but they've always been mixed. If it's someone that doesn't make money on net interest income. All right. Balance sheet quick. You want to hit that, Ian?
Yep, I'll hit this quickly. First, real quick, just to your point about Q1, we've already actually started to see some decline in monthly active users in February and March of Q1. Still up like from where they were year over year, but down from, they reached a peak in January of 2021, kind of in the midst of that Robinhood bubble. And that was for both, for both daily and monthly active users. So it'll be interesting to see if they do go public and Q2 results come out, to see how much that continued to drop. I have to assume that it continued to drop coming out of it, but we can get more into that later. As far as the balance sheet, they've got about $1.4 billion in cash on the balance sheet. And then they have some other kind of restricted cash on the balance sheet. And so part of that's due to cash that they're holding for their for the accounts on Robinhood, but then there's also some cash related to some of like their liabilities that they have to hold on the balance sheet. So they've got a few different buckets of cash on the balance sheet, but it looks like about 1.4 billion that they can kind of do whatever they want with. As we were talking about earlier, they had that convertible note offering, which is over $4 billion. In my mind, that should just be thought of as dilutive equity at this point. That's going to convert to shares, and it's going to be dilution basically. So that's kind of the story on the balance sheet. You should check and do some more research. And there's been some people who've put out some good reports following the whole GameStop story about the plumbing and how all these investments work together and where money goes and what the chain of custody is and all those types of things. I know that there's some good threads on Twitter and probably also some good articles and Substack things. And so I'm not going to get into all of that right now, but that's something to consider when looking at this, because their balance sheet is dependent on how all that money flows and how long it takes for the money to flow from one entity to another. Like I said, others are more qualified to speak on that. So if you're interested, go do some research there.
And the other thing is, like, if they get to the point where they have 50 million monthly active users and they have to post collateral for some of these, what they call 10 sigma events, like that balance sheet really starts to matter, or else they might have to raise, like we saw in January.
Yeah, I mean, before, and when they used to have the in 2020 when they had their app just shut down, man, that was brutal. I can't imagine what it was like at headquarters.
It was shut down.
Remember when when it stopped working?
Oh, I don't remember that.
Right? You guys remember that? Remember when the app was shut down? You couldn't trade in 2020, and this was during March, I believe, and different times when they just couldn't get orders through.
Oh, I didn't know that.
Yeah, but either way, let's wrap up the first half with the valuation guessing game. So, what do we think it is going to come out at, Ian?
I'm going to say 25 billion. They raised money at about 11, 12 billion in 2020. 25 billion would be about 25 times revenue. I think SoFi is trading at like 30 times revenue right now.
Oh, dude, that's a discount. Yeah,
it is. Yeah, it's a discount, but I don't know. It'll be interesting to see, but I'm going to guess somewhere 20, 25 billion.
All right.
I think it gets a meme stock valuation. I know they're giving shares to Robinhood users.
And that sounds great, but that they're like, we give them to them. They're going to do their dirty work. You know what I mean?
I could see a world in which they halt trading of Robinhood on Robinhood.
Yeah, that would be a sight to see. It'd be fun to watch.
So I could see it being north of 40 billion. So isn't it estimated?
Hey, what about close? First day close or open, like not some random weird spike.
What do you mean?
You know what I mean? Like close, like
Yeah, I could genuinely see this getting like 30 times sales, which is probably like 40 billion, I guess.
Yeah. When I was doing an article on them, S&P Global said at least 30 billion from what they're hearing, probably more.
And that's believable.
I think it's going to be 40 billion.
Yeah.
I mean, there's been rumors of 50, but I think that was probably the one that the company dropped themselves. There's always that one where you're like, everyone's like, oh, that's insane. And like, you guys, like sources are saying Robinhood's going to go public at 50 billion. And like, well, that's probably just Robinhood themselves. All right, let's hit the ad break, and then we're going to discuss what we like, don't like about Robinhood's business. All right, welcome back. Next up is anecdotal evidence. This one should be fun here. We've all had anecdotal evidence with Robinhood. Ian, what are your thoughts?
Yep. So my experience with Robinhood started about a year after I started investing, I think. I came across it, and I already had a little account at Schwab, but I thought, hey, if I can get money transferred immediately and commission free, because at the time the Schwab commissions were actually, I think, like 12 or 13 bucks a share. So when I'm buying little tranches of, $200 things, right? That's like, if you count it on both sides, it's 10% of my initial equity. So I was like, man, if I can get on Robinhood and not have to pay those commissions, I'd love to do that and be able to buy one stock at a time and diversify faster and all that type of stuff. Then, obviously Schwab dropped a commission free, and I went, well, why am I on Robinhood anymore? Because I actually, I think the user interface is good, but it wasn't what I was looking for. I wanted some more tools and some more data. And then also I wanted to open a Roth. And so I opened all of those types of things with Schwab, and then eventually still have my little Robinhood account over there. And
that's the gambling account. You gotta scratch the itch with the gambling account.
Yeah. And eventually I was like, you know what? I just want all this at Schwab. And so I think Robinhood charges an $85 fee to transfer your assets out.
Really?
So I called Schwab and I said, hey, if I transfer these out, will you cover the fee? And they said, yeah, we'll cover the fee. And so, so I transferred it over. Schwab covered the fee. So now I'm all 100% in Schwab.
Yeah. Schwab customer support is one of the best in the financial industry. I love them. Ryan.
Yeah. I mean, everyone's got their own experience with Robinhood. I think people our age, at least, or their own, take on it. I started there. Most people do. I mean, the commission free is such, at the time, it was such an edge because the young people just don't have much money to play with. And so, but I moved to Schwab pretty early on, I guess. I think there's still a little bit of money in my account, and it's pretty much just like fun gambling money, I guess. Like if I ever wanted to buy some crazy out of the money options on some random just hunch, that's the place to do it. But I honestly think it's a very, very small. It might be gone now. A contract might have expired, worthless.
I think you have this in your notes. Forcing the hand of the big guys is nice from an investor's perspective. Love how they're doing that now. But me personally, I really hate it. I hate the app. I'm not gonna mince words here. It makes me upset seeing it. How my friends use it. Like once we talked to Bill Brewster and he kind of opened our eyes even further to the tactics they're using, got pretty angry at the company. That's the slot machine tactics, the notification tactics, and then the green and red stuff is so. I mean, when everything's good, your whole page is green, and it's like a magical cartoon, and then when it's red, it looks like, I don't know. It's just red level midnight, you know.
Yeah, it's mind-blowing that it feels like Robinhood themselves don't notice, or at least that's the narrative that they put out, what's going on.
Yeah, it's kind of like it's kind of like with YouTube and Facebook. They're like, I don't know, we didn't know that Nazi stuff was there. Like, I don't know, guys.
Like we'll
fix it.
In that FINRA $70 million fine or 75, whatever it was, there was 10,000 customer complaints that they didn't disclose with whoever that regulating body was.
Yeah. Their track record of acting
ethically.
Yeah. Or maybe conservatively, you know what I mean? Not risk averse. They seem to take a lot of risk. I wouldn't expect that to be risk averse as a shareholder going forward. All right. Future growth opportunities. Ian, what are your thoughts here?
Yeah, this is going to tie in a little bit with some of your concerns. So I think one of the future growth opportunities is adding retirement accounts, or other types of accounts, because really young people, that's what young people should be doing. And that's part of the reason, so when I first started, I had an account with Schwab, like I said, and then I opened an account with Robinhood, and then I needed to open I wanted to open a Roth IRA, and I probably would have opened it on Robinhood if the option had been there, and my assets might still be with Robinhood. Maybe not because of some option stuff I wanted to do, but they might still be with Robinhood had I been able to open that Roth IRA, but I wasn't able to. And so I moved everything over to Schwab. This is kind of the point that touches on your concerns. They call themselves, or they've started doing these marketing campaigns where they say, everybody is investors, right? We are all investors. And that's a great theme, because I do believe that we're all investors. But the problem is they're reinforcing behavior that's turning everybody into gamblers, right? And I think doing things, if they could actually help all these young people open up Roth IRAs, then I'd be 100% on board. Then yeah, we are all investors, and you're helping us.
And that's what. Here's my thing. Kind of a pie in the sky question, but as a society, do you want Robinhood to be a Roth custodian? Because the idea behind Roth IRAs is that the average American can build a retirement tax free. If that retirement account blows up at 30 and you're allowed to trade out of the money options without any collateral, do you really want them having that power?
That's interesting. That comes back to Robinhood's business tactics.
Maybe just don't allow options transactions within a Roth.
And there already are restrictions on some of the types of you can still do some options within a Roth, but some of the more advanced strategies are not allowed.
Not allowed. Okay. What makes me concerned about management's integrity is that they launched crypto back in 2017 when the company probably had 2% of the employees they do now. And that seems really hard to do. Or maybe it was 2018. I can't remember. They didn't have dividend reinvestment, Roth IRA, or regular IRA. That seems a lot easier to build. Maybe I'm wrong, but that seems a lot easier to build because it's just getting the regulations through than a crypto thing. And, is that really, I don't know, what's helping your customers succeed in their retirement?
There's an element of tone deaf for sure. Like even when those customers' accounts were getting broken into and people were extracting money and they'd reach out to customer support, they want to get back to them for 2 weeks or whatever. That's exactly when they launched a new color green for their mobile app.
Yeah, the new color green. That's huge, guys.
And people are like, "Are you serious? Look, we're your customers need help." But
yeah, Ian, you have anything?
I was just going to say the last thing is it's hard on Robinhood because I am thankful for them pushing the industry to commission free, and I think that is a good thing for investors. Yeah. But the problem is they've then tried to capitalize that and say they're democratizing finance and we're all investors and we're all, we're doing so much to help in the investing community and getting young people invested, but it's not investing, right? A lot of what they're doing and the behavior that they're really incentivized to promote is not long-term investing that's going to make a meaningful impact on the lives of most of their customers, right?
Day traders most day traders don't make money. Some do. If you're a day trader, whatever. Some people do. It's harder though.
Right.
And majority of options traders lose money. So they're incentivized to get people to use tactics that on average, they're going to lose money.
Yeah. And
sounds bad.
I mean, maybe this is sort of too far into the future to think about this, but like once that generation that adopted Robinhood early hits the age where they're high income earners.
So like 20 to 30 kind of.
And they have tons and tons of short-term capital gains tax they have to pay on stuff that they've been trading.
And it's not like zero, it's like 25, 30.
Yeah, 25, 30%. I think they might recognize like, oh, maybe this isn't the place I should have my money. But
Roth IRA, you can trade your hearts away.
I guess that's true, which is once again, kind of double-edged sword. But I'll hit mine. My first thought was just adopt the stigma as of being a gambling parlor and just move to sports gambling. Like you've got the user interface, you've got the user experience.
They're the best at the tactics.
They are so good at that. Like there is maybe a pivot could be in play here, but
a pivot to a casino I'd be enticed actually as an investment. I'm serious.
I guess if they don't want to do that, which I don't think they would, copy the Cash App, try to do some sort of cash wallet stuff, maybe boost, like just try to build out
the debit card,
just more optionality for users. I mean, you should be copying kind of the Cash App's moves. I think Robinhood has debit cards.
Yeah, that's what I'm saying. Like adding more stuff to that debit card. And that leads into my future growth opportunity, which is turning into a bank. This might be the boring one. People roll your eyes. Every fintech company says that, but there was a lot of language in the S1 that makes it feel like they want to do this eventually because they're saying stuff about we're going to manage everyone's financial future or something like that. It's a bit, they got those missions and visions and stuff like that, but seems like that's what they're going to try to do. They had that cash management thing where they're talking about, I forget the interest rate they were going to give people. It was like upwards of 3%. And then they botched that rollout back in 2018 or 2019. And now they have that at a lower interest rate. Either way, that's kind of smart, pretty good initiative, get people at higher interest rate than they will get at a regular checking accounts. It's a crowded space.
It was above the risk-free rate. I'm not sure how that.
Yeah, it seemed impossible for them to do, which is why they definitely lowered that. It was a bit of a gimmick at the start, but I think they're going to try to move more into this. However, it's an extremely crowded industry. There's so many of these neobanks.
Definitely. All right. Highlights, lowlights, Ian, what do you have?
So the highlights for me is just the initial brand building, as I mentioned earlier, that it really is an impressive story about how much adoption they were able to get and in a spot where their vision was actually correct, which is often the case with many of these companies that get successful. It's kind of survivorship bias, but many of them did have visions that actually came to fruition with commission free and, quote unquote, democratizing finance. As much as I don't agree they're really doing that, they were able to drive this whole industry to commission free. The lowlights for me though is how much of their revenue, as you highlighted, Ryan, comes from options, which is like we were talking about earlier, the spread on trades, they've expanded a little bit, but then the spread on options, because it's a less, there's less volume going on in options. It's a more inefficient market. And so the spread on options are much higher. And if you do options trades, you recognize this, that like oftentimes the bid-ask spread will be, tens of dollars difference per options contract. So there's just a lot more money to be made there because the spread is so much bigger. And they do, one of the interesting things is they do it. Many of the institutions actually do it on like just a per transaction fee for the order flow. Robinhood takes a percentage of the spread. And so they're actually, the bigger the spread, the more money they make. It's not just per transaction. And so,
that's interesting.
Which I think is why, like, that's why the options, I think, is such a high percentage of revenue, because they're getting more revenue on every single transaction because the spread's just larger and larger. I'm a little bit worried about that from a business standpoint, because I just worry that there might be some more regulation that comes into that space with how many bad experiences people have had with options on Robinhood, and they seem to take a fairly lenient approach. It's much easier to get options, at least initial options approval on Robinhood than it is on some of these other brokers. So that's one thing. The active users declining the last couple of months is another thing. And I'll get into that in a second, but those are kind of my main lowlights.
Okay, Ryan?
The highlights, same as Ian. The brand building's been exceptional. I think the product market fit to build this fast in 6 years they had to be in the right place at the right time, and they were.
There's a reason they won versus everyone else.
And there's also a huge network effect with especially with anything stocks related. Not necessarily like
switching costs, maybe.
It goes viral within like communities.
Okay, virality, yeah, definitely, yeah.
Like, oh, he's on Rob. Like think about the GameStop. Think about how many users they got from that. How many texts you got from random people that have never been investing. You're like, I'll set up an account with Robinhood.
And what's interesting is they use that specific color tone that no other app uses. So when someone else is on it, you're like, I've never seen that type of app before. What is that? I think that was one of their smartest moves too.
Yeah, I mean, it is kind of the go-to app for first-time investors, and this could be a high-margin business if things go well, for sure. Lowlights for me, I don't like the CEO. Like, I personally have a gripe with him, I guess. He probably doesn't care, but
that's what's kept us out of Facebook, though, and that's cost us money. I don't know.
I guess another lowlight is that the entire platform hinges on market sentiment. Sure, think about those active users could reverse. The activity could reverse. Like, imagine if we got a boring market for a year.
Why not just get the levered up?
Done.
Why not just get the levered up NASDAQ and ETF? I don't think that's equivalent. And really, don't buy the levered up NASDAQ ETF. I also think they went public at the most opportune time with those first quarter numbers. Yeah, little window dressing now.
Which, that's better than going on behalf of the people that gave you convertible notes. That's better than going public at an inopportune time. But
True.
For the retail shareholders receiving that, I just be cautious.
Yeah. And then another thing with the window dressing. Okay, Dogecoin revenue was 6% of revenue in Q1, and peak Dogecoin was April, so Q2.
No,
I think
it's ahead of us.
It's ahead of us. Yes. Okay. Sorry. But I think they could have 20% of the revenue with Dogecoin in Q2.
Yeah, I guess it's possible because there was that huge bump, wasn't there?
Yeah, and apparently Dogecoin has great margins for them. So
it's believable.
Yeah.
What about you? Do you have any highlights?
Let's see. Other highlights. Nothing. I guess infrastructure and operations look to be in a way better spot now. They said they're up. They can take 5x of the demand of what they're currently getting. So that's better than what they were doing in 2020 when they had the app shut down. But everything else you guys said, I agree with. Lights, or go ahead, Ryan.
Installed base and switching costs matter. They could possibly pivot the business model in a few ways that make them better in the eyes of investors, because and they can do it successfully because they have this massive installed base.
Yeah. But it's a big if. Let's see. Other lowlights, reliance on crypto. That Dogecoin stat, I mean, I write that to zero. Their crypto revenue, while not, okay, I don't know what percentage of the transaction revenue it is, but in Q1, it was up 2,000%. So I don't know. That feels unpredictable to me. Let's see. Anything else? Exploiting customers just doesn't feel sustainable. So when Robinhood does well, it's when their customers are doing poorly.
Yeah, no.
I believe that.
You don't know that.
Well, on an average, it has to be true.
Also, I don't know, is maybe this a low light? Like the larger percentage of AUM that options becomes, the higher chance that AUM disappears.
Yes. Yeah. It's like a
what
self-fulfilling
happens
thing.
when these accounts actually go to zero?
Yeah, I know.
You're using your transaction revenue lost you assets.
If the majority of options traders lose money, that means if you're getting people to do this, eventually they won't have any money to trade options. I just don't.
Which is a function of options trading. Like most have to lose money.
You can't, like they're not going to solve this. I don't know. All right, we don't need to rant. Okay. Bull case. Ian, what's the bull case for Robinhood? Let's put a valuation on it because it's tough for pre-IPO. Let's say they go out at a $30 billion valuation like S&P Global's saying.
Yeah, I think that the bull case is they become the financial institution for younger generations. And as I've kind of mentioned today, I don't think that's likely. And I think there's a lot of competition out there between all these ones I've talked about, whether it's SoFi, Square, PayPal, even some incumbents like some of the existing banks and Visa and MasterCard. Like there's a lot of options out there for who's going to really become a major financial institution for younger generations. And I don't see it, but that's the bull case. I think that they just become more and more intertwined in millennials and Generation Z's financial lives.
Diversified revenue.
Yeah, diversified revenue, exactly.
Yeah, Ryan.
Yeah, same as Ian. It's maybe I am overthinking the downside risks and I'm overthinking the negatives, and maybe the perception among the public for Robinhood is a lot more positive than what I'm thinking.
Or not even positive, people might not care.
Yeah. And then like if a lot of those first-time investors continue to stick around for their lifetime, this could be a good investment at 30 billion, I guess.
Yeah.
Possibly. I'm cautious to say that, but
yeah. I mean, my bull case could be that everyone else that hasn't turned into these degenerate gambler types, well, maybe they get more and more people to start doing that.
Yeah, maybe this drives attraction from would-be non-investors.
What do you mean?
Like people that would have never invested are adopting it, maybe not for the right reasons, but they adopt it because their friend was on Robinhood that made money trading options.
Yeah, but
it's revenue for them.
Yeah, I think if the market cap goes out at like 30 billion, something like that, 30 times sales, unless they can really diversify the business model into something more of a cash app where they have like a debit card thing that gets a pretty nice take rate and that becomes a meaningful portion of the revenue, you got to expect AUC to get to like $1 trillion, right?
Yeah.
And that's not crazy, but
it's not impossible. I do think it is for sustainability that I think they have to diversify where their revenue comes from, which is possible. And I believe, if I'm not mistaken, that in Q1, transaction revenue was a smaller percentage of overall revenue than in 2020.
Yeah, they had more gold subscriptions, I think. And then they had the interest stuff. Margin was up a lot. Margin's up like 10x. Margin accounts. That's good. That's good. Margin's cheap. It's cheap. No one can get in trouble with that.
It's free money.
All right, bear case. I mean, this one's easy. Ian.
Yeah, I'll jump in here real quick just to add a couple of numbers to what we were talking about. Cryptocurrencies in Q1 2021 were 17% of total revenue was transaction-based revenue from cryptocurrency, 17%.
17, okay.
Total transaction-based revenues were 81% of all revenue in 2020 or in Q1 of 2021. And then as far as like the the net interest revenues, which includes some of what you were just talking about, it was down from 19% in Q1 2020 to 12% in Q1 2021. And so becoming
I'm wrong.
a little bit of a smaller piece. And they had, like, the big thing was they earned less interest on their cash and securities while maintaining about the same level of interest earned on margin interest and securities lending. So anyways, just a few numbers there for people who are interested. As far as a bear case, the cynic in me says, and I think there's some truth to this, is that order flow is about to decrease, monthly active users is about to decrease as we're coming out of COVID and stimulus money. We saw that trend start in kind of February.
Yes, the stimmies got to help them.
Right. And so, especially with an account size of, what is it, $4,000 average account size. So the stimulus monies actually can be a big, you get you add up all your stimulus checks, and that's basically your average account size at Robinhood. So anyways, I worry that they're IPOing at the perfect time for this business, and that these growth rates, right, they grew 300% or whatever in Q1. That doesn't seem sustainable to me. And I fear that this is a business that may have already hit its peak in terms of revenue. It's probably unlikely that that's the case, but it definitely, I think, we're going to see decelerating revenue growth going forward. And that I think that could really hurt the stock, that should be high expectations and low results over the next few quarters and years.
I'll say that there's been some headlines thrown around. E-Trade, TD, Ameritrade back in the 90s. It was like 1998. And maybe that means this bull market has a few more years to run, but it was like revenue up 100%. And those are some pretty poor investments from then on. So, like, just because trailing revenue is up, you have to ask yourself, how predictable is that revenue going forward? Ryan, what's your bear case?
The bear case, we just talked about Constellation Software, and on that we said, all right, there's an incredibly high margin of safety there. There's a high floor. It's going to be hard to lose money because there's so much predictability with the cash that the company generates. The floor on this investment is extremely low. The bear case is
90% lost your money. Well, we're assuming the $30 billion.
Assuming a $30 billion valuation, you can lose, in my opinion, a ton of money because the revenue streams are so unpredictable and it's so susceptible to market sentiment that if things were to go wrong, there's just not a lot of safety on this investment.
Yeah, bear case for me, or go ahead.
If the convertible notes convert and just to shares, at least they don't have to pay back lenders.
That's a plus. That's a plus.
It's just VC dollars gone.
Or, well,
well, retail by that point.
What word am I? The lockup period. That's got to be it. I'm not saying all VCs do this or anything, but that lockup period, that first 6 months, you kind of hold on to your chest here, hoping the price doesn't tank or something like that. But I'll hit my bear case. I mean, simply, it's a bear market. It's because if investing ever becomes unfun again, like I don't know if it ever will. Maybe we're in a new paradigm. I don't know.
And maybe this is just this is how financial markets are going to operate for the next 50 years.
And the thing is, Robinhood it's not like Robinhood is reacting. Robinhood made it happen. So they can keep making it happen.
That's true.
But if a bear market comes and everyone, like, when bear markets come, it by definition means there's less investors out there. So, the investors in Robinhood are going to lose money. They're going to leave. There are going to be less trades.
It might not leave. It might just be an idle account.
Yeah, our idle account. The SEC has talked about regulating order flow. So that could come through.
Yeah,
I don't know if I want that. I'd rather have order flow than commissions, but that's just as someone, I don't know. I guess that
depends how much money you're playing with.
Just put in limit orders, guys. If we all put in limit orders, we can crush Citadel's business model. No, probably not. They get a workaround. They're a lot smarter.
But that's the other bear case, I guess, we didn't talk about is the ongoing legal proceedings. There's
a lot.
There's a few that are active, and if the SEC or whoever the regulator is maybe gets better funding and they decide to take action.
Yeah, this feels like Monsanto. You know what I
I
mean?
mean, 70 million was a slap on the wrist.
Yeah, I don't know. It feels like that legal risk is there. But who knows? Who knows on that?
More or less interested. Yeah.
I'm less interested. This is a company that like the story has a lot of potential, right? Like if it was actually democratizing finance and actually helping all of us to be better investors, it would be something I'd be super excited about. But I just feel like they're telling one story, over here, on one side of their mouth and actually acting a different way. And it's frustrating. I think there's, as you were just talking about, I think there's some regulatory risk with this one. Man, it's just not something I'm interested in.
Yeah, Ryan?
Less interested. It's a sin stock that sin stock investors won't touch. Like,
well, I mean,
yeah,
sin stock doesn't equal good investment, but I don't know.
I just don't like the hypocrisy of it all. I have a very cynical take, I guess, the business model, and maybe that's not what the standard person perceives.
It doesn't matter. It doesn't matter what they think. It's what's happening.
There's just so much lack of predictability and risk. It's probably something I will stay away from.
Yeah, the big key. Yeah, I'll say less interested as well. The big risk is unpredictable. I mean, why buy this and not buy up a levered up ETF that, whatever I forget those are called, the triple levered S&P futures or the triple levered NASDAQ. Like, you're just going off market sentiment here. How are you able to predict that? It just doesn't, I don't know.
Yeah, agreed. But okay, I added a new question. What price would you actually consider buying Robinhood at?
Yeah. Ian, do you have anything? I got to think on this.
So I'll talk for a second. So I actually wouldn't consider buying this at any price. There's a lot of stocks for me that I just say not interested at all. And I don't let myself get tempted, even if it's at a low price. Facebook's one of those stocks for me, actually. There's a lot of things about Facebook's business that I look at and go, okay, I kind of like that. But for some other reasons, I just don't want to buy Facebook. And part of that is I don't believe in what the company's doing. So, I just, that's the same thing with Robinhood. I think I'm so frustrated and disappointed. And then also their brand image, right? It's a weird business that has both, like, many of the people in finance really don't like Robinhood, right? Of, these people on Wall Street, and they think, oh, it's a casino and all this type of stuff. But now you've got all these other people, you've got the whole Wall Street bets community mad at you too, because of the whole GameStop situation. And so their brand image, despite all the great work they did for years and years, their brand image has really taken a hit. And I don't think they're walking the walk of the story that they're telling. So it's one that I wouldn't consider buying at any price, honestly.
All right, Ryan.
I am less morally sound than Ian, I think.
Yeah, I mean, it's not the morals here that's keeping me away.
I think if I could make money on the investment I would use that money to shut it down. I guess maybe that's where I get my moral bounce back. But
I would start up a thing just to get people. We'll sign you up on Schwab, Fidelity, and we'll get the Roth IRA started. I'll do one a week.
Sub 4 billion, I would consider.
Yeah, I think I 3 billion came in my head
because you can still lose money at sub 4 billion or sub 3 billion, but your upside is really high in a market like we've had last year.
Yeah, I think,
and especially at that point, at that valuation, if they're able to diversify their revenue streams at all, this probably becomes a winning investment, right?
Yeah, I'd say 3 billion was the number that came into my head.
But they're not generating.
I don't know.
They're not generating any cash though.
I know. So you can't really. I mean, the probability is there. I actually don't think they can be that high margin. Yeah, I don't think they can be that high margin. Like, it's not going to be.
Operating expenses will always carry. They're going to have to.
God, dude, 30 billion is fuck. Sorry for swearing. That's just, it's a lot. It's a lot.
I honestly, if there were ever a company that I would say no forever, this might be it.
Yeah. All right. Stock for next week. Ian, what are your thoughts? What do you got?
Thinking we're going Paycom next week, ticker PAYC. It was one of the first stocks I bought multiple years ago, and it's been a good winner for me, but I haven't done a whole lot of research on it recently. It's been one of those that I just kind of let do its thing. So excited to take another deep look into it and share it with all you guys.
Yeah, that should be a fun one. It's been a really strong performer in the SaaS business. I'm not sure if they're exactly SaaS. I think.
Yep, they are. They're human capital management, so kind of similar to an ADP or a Paychex. So,
all right. Should be fun. Okay, that's going to do it. Remember, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I are general partners at Arch Capital. Arch Capital clients may hold securities discussed in this podcast. Thank you all for listening or watching. We'll see you next week.